Welcome back, investors. Jake here. In this video, I'm going to be taking a short position on the S&P 500. Usually, I don't like doing this because generally stocks go up over time. However, I've been doing enough technical analysis where I'm feeling confident another big drop is coming over the next week, week and a half. That's what we're going to talk about in this video. When we check in with the markets right now, the S&P is down 1.35%. And if you were paying attention to the markets yesterday, the S&P was actually up 2.68%. I think this was the largest single-day percentage gain since 2020. But there's a lot of huge movements in the market, guys, between greater than 1% gains, greater than 1 or even 2% drops. So if you're trying to time this with your long-term positions, either individual stocks or index funds, I highly don't recommend that. Who can predict what's going to be a 2% up day versus a 2% down day? This is just how it's going to be, but I think it's going to smooth out once we get past this initial Fed interest rate hike. A couple quick things of news I want to talk about before I show you the short position I'm taking on the market. But 10-year Treasury yields rose above 2%. This should be on the back end, the Federal Reserve reducing their quantitative easing. Ideally, they need to stop buying government bonds. This percentage rate should increase. And as bond yield rates increase, this will put selling pressure on the market as people basically give up on stocks and they just buy government bonds instead. Inflation is 7.9%. This is pretty bad. Obviously, with energy prices, this is not going to help this number going forward in the future, month to month. A piece of good news, guys, is Amazon finally announced a stock split. They're going to do 20 for 1, and they also announced a $10 billion share repurchasing program. And this is good if you want to trade options on Amazon because now I can buy full call or full put contracts. I don't have to just do debit spreads. And when you look at Amazon's share price, it's gone nowhere in almost 2 years. Amazon's share price hit $3,000 a share in June of 2020, almost 2 years ago, and it's been trading flat. Obviously, over time, this has been a huge winner if this has been in your portfolio. But Amazon shareholders, I can tell, are getting frustrated by it not going up over the last 2 years. And when you look at Amazon's valuations, because they reinvest so heavily in themselves, their price to earnings doesn't look that great. They're not optimized for maximizing profit yet. So how you can evaluate Amazon is based on their revenue growth and their price to sales ratio. And currently, Amazon's price to sales ratio is 2.98, where historically, going back all the way to 2015, this has been where Amazon has been valued. So you can argue it's not that overvalued. Year over year growth, obviously they benefited a little bit from everybody staying at home during the pandemic and just ordering stuff online. But their revenue growth is still pretty impressive. Last quarter was only 9.44%, but what saved the stock was their profitability growth on their web services division. The technicals for Amazon actually right now are pretty interesting when we go on TradingView, because it's at the bottom of this range where it's been for almost 2 years. So there's lots of upside potential for this stock in anticipation for the stock split. I am interested in taking a position now in Amazon before this stock split, but I don't think you need to buy it in the next 2 weeks, guys. There's going to be a lot of selling pressure here at probably around 3,000. 3,200, 3,600, 3,800. There are lots of levels of resistance, so I don't think it's going anywhere anytime soon. You guys can catch this one later on if you want. Okay, let's move on to the S&P 500. Once again, we've gotten confirmation probably at basically 1, 2, 3, 4 points that were locked in this downtrend. How low are we going? I can't say. But when you have a pattern that stands out this distinctly in the charts, all of the computers and trading algorithms see it. A majority of the trades happening, are being done by computers, not human beings. So the fact that we're creating lower highs going down, lower lows going down, another drop is coming. And it could potentially be on Monday with everybody watching scary news of the Russia-Ukraine war. It could happen on Tuesday, with the Fed announcing their first interest rate hike. They might have to be more aggressive than 0.25%. Additionally, going in through Friday is the third Friday of the month when monthly options contracts expire. So where do I see SPY dropping to? If it can just go down to 41.50, that'd be a profit for me. I would take that. That would be retesting the previous low for the markets. But I think it's going to create a new lower low, and it's probably going to go down to 40.50. This is where a previous broad level of support for the market is, going back all the way to April of last year. Obviously, this is going to frustrate and upset a lot of people, but this downtrend channel isn't going to continue forever, guys. Eventually, this will break, the market will reverse. When do I think that'll happen? And probably going into this summer. I think this downtrend is going to continue through April and maybe even May, but by the time we hit this summer, if we can get some kind of resolution on the Russia-Ukraine crisis and, the world generally smooths out with a couple Fed rate interest hikes. So when I take positions on the broader S&P, I always use State Street's SPY. This is their S&P 500 index ETF. This is what we're going to be opening a 1-week SPY put contract on. This is what my current Schwab account looks like. Something I want to point out real quick is yesterday, after the market bounced up huge, I sold 4 call contracts against my long calls on Berkshire. I'm glad I did that because the calls that I sold are up $915. So in effect, I saved that. Eventually, once I think the market has bottomed next week, I will buy back to close these for any profit, let my long calls keep going. So currently I have $26,000 in cash in this account. Once again, I really want to take a position in Microsoft. Potentially now I could even think about doing a debit spread on Amazon. I'm going to wait to see what the market looks like next week, but I am looking to buy into it at an appropriate time. Okay, let's go to the option chain for SPY. So currently it is Thursday, March 10th, and I'm looking to take a 1-week position. So for expiration date, I'm going to select next Friday. This is in 8 days, March 18th, and we're going to be on the put side. And actually, guys, this is looking a little bit more expensive than I thought it would. When we turn on the Greeks, we can see that implied volatility is actually, spiking. It's in the 30s, but I'm still going to do it. I'm going to look to potentially open 2 contracts. I only want to spend $1,000 on this idea. So what if we went with the strike of 415 and we bought 2 of these? So we are going to buy to open 2 of these. And what's happening here, currently SPY is at 422. Wow, that's actually pretty far away here. So for these contracts to be in the money, SPY has got to drop $7 a share. That's basically almost 2% from where it currently is. And according to where I think it's going, it can get down to 40.50. So SPY would be about 404. Yeah, that's actually pretty doable. Okay, so I'm just gonna buy 2 put contracts on SPY 1 week out. Obviously, if it's not shaded blue, it's out of the money. There is no intrinsic value yet for these contracts. So potentially, if the big drop comes on Monday or Tuesday, I can sell to close these and not actually lose most of my remaining intrinsic value. It only rapidly wastes away, the closer you get to expiration. I'm not going to hold these till next Friday, and I'm definitely not going to exercise them. So I'm looking to take a position today, then potentially close these for a profit next Monday or Tuesday if a big drop happens. Okay, let's go ahead and open these. These two put contracts are now in my Schwab accounts. Once again, guys, this is not a very large position, only $1,000. The reason why is because the risk is so high. If SPY goes up, let's say, peace talks, there's a breakthrough over the weekends with Russia, Ukraine. I mean, this money is just 100% gone in less than a week if I'm wrong. However, what is the upside potential should the market sell off heavily Monday or Tuesday? It's pretty high. I could probably double, triple, or even quadruple up if there's a very fast movement, making a $2,000, $3,000, or $4,000 gain in a couple days would be kind of nice, but I gotta have, realistic expectations here. If I can just double up, make a couple $1,000, I'll consider that a win and happily sell to close these contracts. Okay guys, if you found this video informative, give me a thumbs up so the algorithm knows it's good. Comments or questions, let me know down below. Love hearing from you guys. Till the next video, take care.